The unspoken levels of lending.
Here's actually how it works.
Morgan Bushell, property investor, mortgage broker, and founder of Full Circle Finance, gives us a peek behind the curtain into the different levels of lending most mortgage brokers just don't talk about.
Level one is where you're just wanting to buy that very first property, knowing who's good, knowing who's motivated, and that's what brokers do.
Talk to me about reaching lending level 2.
So this is primarily going to be where you get
Unpacking this is something that can be very helpful for people that feel stuck at one level of their property investing journey.
to get to that next level. That's where you probably need.
If you're interested in learning how to potentially unlock more equity in your portfolio, or simply how huge investors keep getting bigger, you're going to enjoy this episode. My name's Todd Sloan. You're listening to the Pizza and Property Podcast, and this is my chat with Morgan Bushell. Morgan Bushell, how you going, man?
Good, thanks. You?
Yeah, very good. I'm excited to unpack this. The unspoken levels of lending. This almost sounds like a little bit of an Illuminati, but I know that there's no tinfoil hat required here.
No, definitely not. No.
But unpacking this is something that can be very helpful for people that maybe feel a little bit stuck at one level of their property investing journey and can't quite figure out what it is. A lot of the time, it can be a financial stuck point, can't it?
Yeah, definitely can. Yep.
So before we start getting into level 1, 2, 3, and 4, and basically what it is, how to pass it, and the benefits of passing it, is there anything you kind of wanted to set the stage with this one?
No, I'm really happy just to dive straight into it. So,
Perfect. All right. Talk to me about level 1.
Okay, so level one is where you're just wanting to buy that very first property. So, for example, most people, if they aren't aware of mortgage brokers, they may go to the bank who they currently bank with, or they'll just walk into a branch.
Mm-hmm.
So that's kind of the starting point if you aren't aware of using mortgage brokers, especially ones that are investor savvy. So that's where people would generally start.
And I find a lot of the time when people say, like, oh, it's all right, no, I'm fine, I've got a broker. And then you dig just a little bit deeper and it's like, it's either not a broker, it's a friend at the bank, or it's a broker that maybe doesn't really have the experience in the portfolio creation side of things, but they know how to write a loan.
Yep.
And that's what you're saying, this is the difference. This is kind of entry level 1.
Yeah, definitely. It's where you can probably most likely start for most of the population.
Okay. And what should people be looking at to pass from level 1 to level 2?
Yeah, so when it's leveling up, that's where you really want to invest in having a more solid relationship with an investor savvy broker. So not just a broker, you want someone who basically helps people achieve property success as a broker and does it for a living. So people who I guess have clients who are mostly investors, but then maybe they themselves have also got their own portfolio as well.
So they've actually walked the talk.
Yeah, that's right.
Okay. All right. So level 1's pretty straightforward then. And really what I'm hearing as far as the benefit to passing is having someone in your corner that actually understands portfolio construction instead of just loan writing.
Yeah, definitely.
Gotcha. And before we get to level 2, what's one of the most dangerous parts of level 1 that you find people getting stuck with so they don't actually end up getting to level 2 lending?
Yeah. So the biggest point here is where they get the wrong structuring advice for the portfolio in those early days.
Okay.
So it might be that the lender has given them an investment loan that's on principal and interest, or the worst part could be where they're going from 1 to 2, or they're using their home to buy that first one, and they've cross-collateralized the properties together.
For anyone that's super new at property investing, can you give me a quick 10-second, 30-second overview? Cross-collateralization, huge word, very important though. What is it?
Basically, it's having 2 properties joined together with 2 loans attached to it. So they're basically connected behind the scenes with one bank.
Just quickly, why is it so bad?
So say, for example, one of your properties has performed really well, but one hasn't actually done that well. If you want to keep growing, that one that hasn't done so well, it'll actually be holding you back.
Right. Okay. So cross-collateralization, you want to avoid that like the plague by the sounds of things?
Definitely. There's no reason to do it.
Okay. All right. So we're never cross-collateralizing. And if we do, it could keep us from level 2. But let's say we take the advice, no one's cross-collateralizing. Talk to me about reaching lending level 2.
So this is primarily going to be where you get really good lending advice. And this would ideally be from an investor savvy broker, one who's probably achieved it and also has helped many people achieve the same thing.
So is this that kind of 2 to 3 property, 2 to 4 property sort of range?
Yeah, this is where you really should if you haven't already engaged an investor savvy broker.
Okay. So where are people usually getting stuck at this level? Is it just simply finding someone like that?
So you would get stuck at that level maybe where you haven't found an investor savvy broker and you just keep going until your lending capacity reaches its limits.
Mm-hmm.
And that could be that maybe, again, bad loan structuring advice. So you've gone to the end of that and you can't go any further.
This is like the classic story of you hear someone going, I went to this one broker and they said I could get 500. I went to another and they said I could get 1.5.
Yes.
Gotcha.
Yes, exactly that.
Okay. All right. And this is the difference between investment savvy broker and just broker.
Yep.
Gotcha.
Definitely.
All right. So as far as what you need to pass this level, because we're getting into the bigger leagues then. So if you're basically going from like 2 to 4 properties, you're already doing well if you're at that stage, but you're wanting to really shoot the lights out and go like 5, 6, 7, 8.
Yeah.
What are you needing to pass to lending level 3?
So this is where you've probably been in the game for a bit of a while. You've probably got like a decent amount of income behind you.
Mm-hmm.
To get to that next level, that's where you probably need some level of like sophistication to help you keep growing. So in-depth knowledge about lending and how you can keep growing as an investor.
And so is this when the banks almost start interviewing you and it's like, if you really know your stuff, we've got a different level of confidence in how much money we give you?
Yeah, so that's where it starts to become more about you and what you've previously done and track record, character, management skills, whatever. The numbers.
So can I unpack something there? Track record and character.
Yeah.
How are they measuring character? Like, I hope they're not looking at my Facebook.
No.
That's got some stuff in there from years ago.
No. So this is what applies to what's called the 5 C's of credit.
Okay. So 5 C's of lending. Can you open this up a little bit for us?
Yeah, sure. So character, capacity, collateral, capital, and conditions.
And so coming to the character side of things then, like how is that being assessed?
That's the most important thing because they need to be able to trust you and they need to know that you're good for your word. So yeah, it's actually something that's really hard to measure.
Yeah.
Yeah, but proven track record, your ability to run a business, ability to grow a portfolio, all these things start to matter.
Okay. And so this is the kind of thing that it can only come with time. So if someone's a newer investor, it's like you probably don't have to worry about it now, but you do have to think about you're in the process of building that.
Yeah, that's right. Definitely.
Right. Okay. And it's a big one that comes into then moving into lending level 3. But is there anything else we want to talk about with lending level 2 before we move to the next level?
I think we've pretty much done it justice. So yeah, level 3.
Okay. So level 3, this is when you're going, private banker?
Yes.
I feel like there's helicopters involved now. Like how private banker are we talking?
This is where, like, for example, so I'm not sure about helicopters, but here's actually how it works.
Okay.
So you're probably at that point where you're probably earning a really good income. You've got a very good asset base behind you, but where it works is they're able to look not only at what you've achieved and how good your borrowing capacity is or money to complete, but they actually start to look at what you have achieved as well. So basically it comes down to you a little bit, but then also their ability to be a bit more flexible with how they assess you and, I guess, air quote, like bending the rules to help.
Right. And so this is where the whole like collateral capacity character, like it all comes into it. Like
Yeah.
where it's coming into it beforehand, but now it's really sounding like it's more in the front seat.
Yeah, this is definitely something that they consider when they're looking at assessing your applications.
Interesting. Okay. And so now you're saying like on I think you said a good income or a very good income. How good is good? Because to some people, 150 is good. Some people, are we talking 350, 500? What level?
So generally they're looking at a household income of about 300,000.
Okay, so pretty high, but not like out of this world high.
Yeah, it's not crazy high. And if it's like one person, for example, it could be a little bit less than that. So if you're single, for example, that's kind of like the ballpark kind of answer to that.
An asset base, what are we talking? Like 2 million, 10 million? Any kind of number there or?
So it might actually shock you, but it's actually about 2.5 million outside your primary place of residence.
In equity or assets?
In like assets.
An asset, and that's private banker level.
Yeah.
Yeah, there's no helicopters there.
That's like bottom level of private banking, but that's like the minimum eligibility criteria. Generally speaking, they'll want to see a lot more than that before they're able to help you.
Now talk to me about why this matters, because what I'm thinking right now is, all right, I've got my investment savvy broker. I've got a few properties behind me. They're super good at what they're doing. Like, why do I even want a private banker? Especially now that I know there's not a helicopter involved.
So the reason why you'd want to involve them is kind of like what I alluded to before. There is that ability for them to take a more commercial view of how they look at assessing you. So back in like retail banking and like the regular broker channel, the policies and how they look at it, it's very black and white. Whereas here it's a bit more grey.
Right. Okay. So the rules can bend a little bit because if you've got good enough character, capital, collateral, all the rest of it, it's like, well, we can see that you're good for it. You don't fit into the standard box, but the standard box doesn't apply anymore.
Yeah, they can basically vouch for you and everything that you've achieved. And it's more a little bit about the story, not just the numbers.
This is fascinating. Okay. And what kind of a difference are we talking then? It's like, all right, maybe you can get your hands on an extra 20%, 30%, or is that just totally different for everyone?
It really kind of depends where you are at and what you've already achieved. So, for example, if you're a business owner and you've achieved quite a lot and you've built up a big portfolio, again, it comes back to the story, like how much have you done? How much have you achieved? And then they can kind of base that. Look, maybe the numbers aren't perfect, but they've done really well. Their character's great. They run a great business, stuff like that. So here's something that not many people actually know about private banking. When brokers are introducing them, like their clients to private bankers, what I'm keeping in mind is that there are some private bankers who are there just 9 to 5. So they're there just to get paid.
Right, yep.
But then there are the ones who really are focused on helping their clients get the most out of their goals. So
it's the difference between having the person that lives it and breathes it,
yes,
and the one that's just rocking up for a paycheck.
Exactly, yeah. And the person that lives and breathes it, you want them in your corner.
How do you find them?
That's where it comes down to relationships. So knowing who's good, knowing who's motivated, and that's what brokers do.
Gotcha. Okay. And being able to actually find a good private banker then, okay, I'm starting to see. All right, so the private banker side of things, it might work in some instances, but by the sounds of things, level 3 could also just be leveling up to level 3 with a very investment savvy broker.
Yeah.
Right. Okay. Because you could get a level 3 private banker, but really they're potentially a level 1 like loan writer in a level 3 disguise.
That's a really good way of putting it. Yes.
Gotcha. Okay. All right. Then, and there's still a level above.
Yes.
Level 4. How are we getting there and why do we want to get there?
This is where you'll be using business bankers. So how you get to this level is where you've got some sort of exposure to business lending.
Okay. So anyone PAYG, gone.
Not necessarily. Like if someone at that level is wanting to buy commercial properties, that's where you'd get a business loan for that.
Right. So business isn't necessarily like you're running your own business.
No.
Okay. Yeah. All right. That makes sense. And what's the good side of doing it? Or is it just that is how it works at a commercial property level?
So yeah, to answer your question, the good thing about this is kind of like in private banking world, they start to focus on the 5 C's of credit. Where here in business banking, it's even more flexible because it's not governed by some of the protection laws of residential lending. They're giving you business loans, which are actually not regulated as strictly. So by that, there is a bit more flexibility and focus on the qualitative and quantitative parts of the application. So to further illustrate the point, like a bigger client of mine, where we took them to a business banker. So this person's been a business owner for a while. They've got a very big portfolio. They looked at their business, and even though we were applying for a business loan, they kind of made the decision, well, you've had good success as a business owner. You've had a lot of success as a property investor. You're not like every mum and dad. You're special. So we're going to look at you in a different lens to everyone else.
Right. And so what that ended up getting the loan through where they wouldn't have through the eyes of like a level 1 or 2.
Yeah, like they bent some serious rules because they made that judgment call based on their ability to run the portfolio and their business. And as a result of that, we were able to achieve an outcome where we were able to get a $5 million cash out on the portfolio, which you just would not be able to achieve at any of the other levels.
So whenever I'm seeing comments YouTube about like when people are getting to these like huge portfolios, this is essentially the path that they've walked down lending wise a lot of the time.
Yeah, definitely.
Right. Okay. So no one with a giant portfolio is at level 1. People that are at level 2, they could still have some good sized portfolios, but realistically, when we're starting to talk about people that have got like 10, 20, 30, 40 properties, they're doing some stuff that everyone else isn't.
Yeah, basically, yeah.
Okay. So if you're listening to this right now and you're inspired by some of the stories we've got on here about huge portfolios and you're like, that's the path I want to walk down, rewind, listen to this episode again, because this is really unpacking the different levels of lending that you need to understand, that you need to aspire to and work towards. Because if you're going to keep trying to get to level 4, but you're still operating on like a level 1 or level 2 lending, you're going to get frustrated thinking, why can't I move forward? This is exactly the kind of stuff. And chatting with someone like Morgan to actually help you understand more of the detail in this, because there's obviously a lot more to this as well. This is just a quick slice. But mate, I really appreciate you jumping on the show and unpacking this, because this hardly ever gets spoken about. And I think it really shines a light on answering that question that a lot of people have is like, how does financing actually work when you get to that larger level?
Yeah.
But Morgan Bushell from Full Circle Finance, thank you so much for jumping on the show, mate.
Thanks, Todd.